This is Shalab Garg. I'm a 25-year veteran of Wall Street. I've had a job at banks, I've had a job in hedge funds. I currently run my own hedge fund. In today's podcast, we will cover all things Wall Street. What is Wall Street? What kind of companies exist in Wall Street? What kind of jobs exist in those companies? How to get those jobs? We will cover all of those points and more. Hope you find it interesting. Let's get right into it. What is Wall Street? Have you ever wondered all the money that you deposit with your bank account, your salaries, your savings, several $1,000s a month, you, your friends, your parents, what do banks do with it? And it doesn't stop there. Just like you have accounts at the bank, companies like Apple, Google, Microsoft, all of them have accounts at the same bank as well. And they have billions and billions of dollars, even though you may be putting in several thousands of dollars. So all of a sudden the bank has billions of dollars of capital. What do they do with it? Of course, they make loans with it, they make home loans with it, they make car loans with it, you know those activities, but they don't stop there. They also do trading with it. What is trading? Trading is simply an act of facilitating a buy or a sell of a security or a stock. I'm sure that many of you have gone out and bought a share of Apple because you thought it will go up, or a share of Tesla because you thought it will go up. And to do that, you either go to E-Trade or any similar facility and just buy it, and you don't even think twice about it. But you know what? How does Warren Buffett buy 100,000 of those? Because he doesn't have one to buy, he has 100,000 to buy. And if he went to E-Trade to buy 100,000, I promise you E-Trade will get blocked out. So hence, he goes to a bank to facilitate that transaction. And to facilitate it, the bank will commit their own capital, the capital that it raised from your bank accounts and from the companies to facilitate that trade for Warren Buffett and people like him. That is the activity of trading. Trading is one large part of what a bank does, but it's not the only part of what a bank does. A bank is also involved in an activity of investment banking, which is more advisory in nature. It does not require as much capital as trading does. In an advisory business, the bank will facilitate M&A activity, underwriting activity. It will provide advice for wealth management. In my earlier example, to buy a share of Apple, maybe you didn't do it on your own volition. Maybe you went to a bank, to your wealth manager or to your financial consultant to get that advice. That is an activity a bank is involved as well. All these activities together is what constitutes Wall Street. So what is the difference between banks, hedge funds, and private equity? Simply stated, in a very basic way, it is leverage. To take an example, if you buy a sweater for $100 and you sell it for $200, you made $100 of profit. We can all agree on that. But what if you used only $10 of your own money to buy that sweater and borrowed $90 from some other place, let's say your mom or somewhere else, and now you sold it for $200. Now you made $100 on your only $10 of initial investment, and you returned the $90 to your mom and you made a $100 profit on just $10 of initial capital. Now that is leverage. That is how beautifully leverage can work when it works. But on the flip side, if you were not able to sell that sweater for $200 and instead took a $10 loss from 100 down to 90, your capital is wiped out. That is what private equity and hedge funds do. They borrow money to accentuate their returns. And where do they borrow that money from? They borrow that money from banks. Ultimately, that's what banks and hedge funds are doing, is to enhance their returns using leverage. And because leverage can be very powerful on the way up and very destructive on the way down, they are extremely, extremely risk managed and risk controlled in their activities as compared to banks. What kind of jobs exist in Wall Street? Analysts and associates are the two primary categories of jobs that exist for starting out candidates in Wall Street. College graduates are hired as analysts, business school graduates and PhD candidates are hired as associates. What is the difference between the functionality of analysts and associates? Truth be told, they both initially do the same kind of work, except that associates have had a couple of years experience and a higher level of degree, so they're expected to have more professional maturity, and the learning curve and the path that they're on tends to be a little steeper than those of analysts. They're either hired in investment banking or advisory, as I had explained earlier, or they're hired in trading. In investment banking, the job will resolve mostly creating pitch books, helping bankers create the pitch books that they will then sell to clients. And on the trading side, the jobs will be more markets related to price securities and help traders execute those trades. Private equity and hedge funds don't like to hire directly from colleges and business schools. They like to hire from banks because they don't have the infrastructure or the time to train fresh candidates. So they instead harvest off of banks who have the infrastructure and technology to train you, and after that they hire a couple of years later into associate level positions. Why should you look to join these jobs? There is one reason, and one reason only why you should look to get hired into these Wall Street jobs, and that is money, money, and more money. They are only involved in the activity of creating money, and it's not like they're doing anything illegal to make that money, even though in some cases they will go right to the brink of legality to make it. But ultimately, that's what they're involved in. They're not looking to cure cancer or to resolve a war in the Middle East. They're looking to make money. So if you're not motivated by making money and financial markets or services to start with to make that money, then it's not going to be interesting to you. You should be motivated by making money and making it quickly in an early stage of your career. So now that you know what kind of jobs exist in Wall Street, the question you have to ask yourself is, why should you be looking for a job on Wall Street? There's so many other options as well. There is, in my opinion, one reason and one reason alone that you should be looking to work on Wall Street, and that is money, money, money. You want to be motivated by making a good amount of money at an early stage of your career. If you're not motivated by money, you will find the job very uninteresting. This brings us to the end of Finance Stat. Hope you enjoyed yourselves. In the next episode, we will cover what kind of jobs exist, how to get them, interview prep, personality, education, and so on and so forth. I also offer a consulting hour. If you have any specific questions or inquiry, please feel free to use the description box below to reach me. As always, please like, subscribe, or comment to any of what I've said. See you next week.